Hi, welcome in Michael with Viral Funding Solutions. In this video, I want to go over the different types of repayments on a daily, weekly, bi-weekly, and monthly basis and have you understand why it makes sense for you to start here versus there. Well, I didn't want to begin here, but how do I get to that point? And perhaps you already know what you can qualify for and thinking, well, this is going to be a waste of time. I already know, which it isn't. It's going to serve as a refresher, and you're also going to get more information that you may have not already known. So everybody begins in a different place. You are like, well, I want a monthly repayment, and that seems to be everybody's goal. But at the same time, you may have a lot to pay in terms of rent, credit cards, and so much more that's already amounting to 10 to 20,000 more or less. So taking on a monthly repayment, you have to understand if it won't hurt you at the end of the month to make these huge payments on top of that. And now you're paying 10 to 15, 10 to 20,000 plus more or less, and it's hurting your cash flow. Unless you're very cash flow positive, then it's very hard to justify taking on a huge monthly repayment. That can even cause a default and back you up. So at the core of it, you have funding details. Other words, fundability details. And these are things like your credit, time in business, revenue, industry type, and quite a bit more. And at the face of it, we can even go deeper and say business credit with personal credit if need be. What's even deeper when we look at your business setup and entity, etc., if we need to. But you are different than someone else in terms of revenue, credit, time in business, industry type. So you can't really compare yourself, even if you're in the same industry in a subset of it. What it comes down to is, what are these details? If we go deeper into your revenue, we look at your bank statements, if we're getting you more than 100, north of 150,000, if we need to look at a tax return, if we're looking at higher service products with higher documentation, mid to higher doc, and we're requesting more, these are all going to be factors on it, whether you can qualify for a monthly, a daily, a weekly, a bi-weekly repayment. And you may already be in a position where you've over leveraged yourself and you're asking, how can I consolidate these daily/weekly repayments underneath a monthly repayment? And I have those types of debt consolidation, debt reconstruction, and settlement type of lenders. And if you're in this course watching it, there will be a section on all the different business loan types, and I'll consider more the debt consolidation, restructuring, and show you what you can do there. But keep in mind that if you were to begin with a daily or weekly repayment, let's say you don't meet the underwriting, you don't meet the service qualifications and the requirements for a monthly lender, an unsecured term loan. Perhaps you're backing it up with collateral, and then we can talk different, where it's not so much of a credit requirement, not always a time in business qualification, not always a revenue requirement, but you have the collateral that's efficient enough that that lender wants to look at and take. Inventory, you have accounts receivables, real estate, heavy equipment, etc. The list goes on. Well, can you collateralize this? And do you want to give up that kind of control? Now, if it's unpaid invoices, I can understand you can give up as much as you want, inventory perhaps, etc. But if we're appraising at this and we need to take out this, we need equity from this, and then we're talking other things like liquidity, if you have liquidity, there's a lot of stuff to factor in, and then putting your home on the line if necessary and other things. You just have to keep that in mind. So what happens is, the way you look at getting a monthly term loan or a monthly lender, let's work backwards and reverse engineer. Well, there are SBA loan options, there are unsecured term loans, lines of credits that can work on that. There's the equipment financing, there's even the personal loans, and there's a little bit more in between those subsets. But, well, with an unsecured term loan, with at least a 660, if not a 680 and above in FICO credit, with it looking clean, no bankruptcies, foreclosures, liens in the last 3 years, more or less, nothing like that that's showing bad. You're talking about having business credit established, not just with Dun & Bradstreet. Make sure you have it with the other two. You have reporting trade lines, at least 2 to 3. 3, I would say, plus having that reporting and what it's reflecting on your other credit bureaus. And you have that FICO SBSS business liquid credit with the Paydex score. So these are just some. And then 2+ years in business if you have that. And to get a term loan lender of a monthly repayment that's non-collateralized, we're not talking SBA right now, then you have to be doing at least 100, sometimes 150,000 with 5 years in, but there's more requirements. But realistically, 200 or more so 250,000 to 300,000 plus, so about 20 to 25,000 in monthly deposits under revenue Do you meet all those things? Credit, time in business, depositing, everything looks clean. You don't have advances over here that we cannot consolidate underneath the monthly repayment. And I won't speak about all that right now, but we can look at restructuring perhaps because it makes sense for what you have. So, okay, how about an SBA loan? Well, when you're going to need profitability, at least 2+ years, more year-to-date financials, more tax returns. Do you want to have to supply that? Do you even qualify for that? Perhaps not. A line of credit, no business credit established. You don't have these things. Equipment, how about getting a traditional equipment financing loan? Well, you don't have any business credit. You're not going to be deemed credit worthy. You're going to have a thin credit profile. I've seen this time and time again. I do it every single day. Excuse me. And then how about a personal loan? Well, yeah, but it'll be all underneath your personal side. Well, you haven't worked on your business side, so what would it matter? Right? You haven't really established much of a business credit profile or anything on your business. So maybe your personal loan would be the best way to go. Where, yeah, you have to have strong credit, at least a 700, if not a 680 above, minimal inquiries, and there's more like trade lines, at least 3 to 5+ trade lines built underneath that. And there's more. Startup loans, somewhat similar to the personal loan. And you can get a monthly repayment, and there's a line of credit. You don't have the credit worthiness. You don't have the unsecured term loan guidelines, the SBA Express, all these other things. Now, we're going to have to go over here and look at a bi-weekly, daily, or a weekly. And there are merchant cash advance lenders who do a monthly repayment, but you have to have exceptional, like premium, platinum plus material. Like revenue has to be cash flowing so hard and really good, like literally 6 figures and above. Monthly revenue is what I would recommend. It's 50,000 and above in a lot of lenders' eyes, but there's a minimal amount in the MCA space who will take on a monthly repayment because so many people default, end up in collections, and that's not what's going to be given. So they could also do bi-weekly. But you have the other one, the more traditional or the hybrid cash advance, where they're looking at it at a daily, weekly repayment. Now, why am I getting these? Well, they accept you with bad credit. What do you have? I have a 600 credit. Well, that should be enough for a line of credit, shouldn't it? No. Well, what's your revenue? Okay. What's it showing on your credit reports? Your credit's been pulled multiple times. You have inquiry after inquiries on this, late payments. There's so much more deeper that we look at if you get a line of credit. That's why it's harder to get approved for one. And so, okay, well, I didn't really want a daily or weekly repayment, Michael. Well, here's what I'd say, and then here's what you can do. So let's say you get a cash advance, a hybrid, and I have one that I recommend. If you haven't gone through the business loan products, if you're in the course, make sure you go through that. So with bad credit accepted, we can accept as low as 450 in some cases, but more realistically 500 and above, 550 in some certain revenue levels. But we're giving you so much more flexibility, even with bad credit, even if it's good, great, excellent, but you don't have business credit established, everything you've been doing is underneath your personal and your time in business, your revenue, you need it faster, more than these other types of services. So what do you have to outweigh? Well, I don't want a daily repayment of 100. I can't even make it. Well, what's the bigger issue? You're not taking this money and doubling, tripling, quadrupling it. You're not staying or going up in cash flow. It's actually hurting you. You're having less remaining. You have more being applied to expenses. Your expenses are rising more than your revenue is. So you don't have a plan. Your plan is just to use this to mitigate all of these expenses. Pay off cards, etc. Yeah, you take 20,000, you pay back 27,000. You're thinking it's not worth it, and you're saying a daily repayment of, I don't know, $230, $300 more or less. That's because you can't justify taking that 20,000 and turning it into 40, 50, 60, 20, 30,000 just above. So you make a return on your investment. So the question I would be asking myself is, do I have a plan on how I get a return on my investment? Where am I putting this money into? Is it one big thing? If I know my marketing and advertising, where there's a pattern of me putting $1 in, getting $3 out, this has been happening for a long time, and I'm hitting a big wall where I need money to get me to the next step, to expand, to scale, to even grow. And then I have equipment. I got to buy a few vans. I have to start with something. I can't get it all at once. I maybe took on too many trucks. I applied and I got all these trucks at one point, but they were just sitting in the garage. They didn't do me any good, collecting dust, not being operated. think a lender will want to see what's non-operational, and they'll go, "Oh, yeah, why do you have 6, 7 trucks? Well, you haven't gotten the employees for it. You're losing revenue here. You're looking for more money." They're not going to usually lend on that. You have to be cash flowing very positive. And so I would be saying to myself is, how can I take this 20,000? I wanted 50,000 to begin with on a lump sum. Well, so be it if it's a daily. I couldn't qualify for a weekly. I don't have strong enough credit. And another issue is if you freeze your account, please unfreeze it at the time we go and apply. Because I have a lot of individuals who we have to unfreeze your account if you can. If it was done by another issue and it can't, there's attorneys, there's a lot of law in it involved that where you cannot do it, and that's another issue. But unfreeze your account, otherwise we can't. We just took another trucking business who was doing, 50 and above or so, qualified in this market from about 35,000, 40,000 to begin with. And we changed it from a daily to a weekly because they unfroze their credit. We can actually look at their credit soft pull on a lot of these cash advances. So make sure you unfreeze your account, because that can be the major difference if you have strong credit and your cash flowing is in a category of our underwriting where it makes sense to get you a weekly repayment. But even at that, I prefer the daily because you know it's being taken out of your account. It's not fluctuating like a traditional merchant cash advance where it's probably a percentage. You make more sales one day, more is taken out. Less one day, less is taken out. It's a fixed. So you know every single day. And it's not like it should be burdensome. Unless you hit a wall 3 months down the road, pay this off early. What you have to think about is, well, if I get $150 taken out, but I'm making $7,000 a day, like what are you complaining about? And you've been doing it consistently. We're projecting where you're going to be based on the revenue you have now. So it's never like we're going to give you something you can't handle. It's just you don't know what you're getting yourself into until you hear things like these. So take that benefit, restaurant owner, patio set, brings in 100 extra people outside, brings the revenue from 7,000 to about 9,000 every single day. And that's quite a bit. Let's just say 7,000 to 9,000 a week. Okay, good. So it's really benefiting them, and they're being consistent in however much time they need. It can help you short-term and or long-term, however you look at it. But you have to start somewhere and say, what am I taking this money and I'm using it for? What's the percentage? What would be my gross profit margins month to month if I use this? You might not always know it because you don't have a pattern. See, that's the issue. You just don't have a pattern. You're working with something new perhaps, and that scares you. So start with daily if you have to. And then I'll have a custom roadmap, strategic partnership with me. You're going to be able to see, how do I go from daily to weekly perhaps, or daily to a monthly? How do I stay monthly? How do I move from here to here? What can I do in the meantime while I'm doing this? Can I pay it off early? Yes, early payment discounts, no prepayment penalty. If you got 6 months, 8 months, 12 months, and you wanted to pay it off halfway there, 3 months, 6 months, 2 months, boom, done. Come back, receive more funding. So you initially got 20, next time you get 20, an extra 20,000, or we get you 15,000, 30,000, we raise it. So now you're at your goal at 50,000. Well, you wanted to get your goal at 100,000, well, 50,000 here. Then what do? You're a proven client. The lender is going to work with you more. It's all about building that relationship with myself and the lenders and the underwriters. And I work with the best. So you have to start somewhere and move in. Maybe it's weekly to monthly, bi-weekly to a monthly. You consolidate, you moved in from a cash advance to an unsecured term loan because you raised your credit in that meantime. We can consolidate a first position. Boom. It works. We can restructure, debt consolidate if it makes sense. But don't bite off more than what you can chew. If you're growing fast and you have these daily repayments, I can understand you couldn't wait. You just needed more. You needed an additional 15,000. You got one from this lender, from that lender. But I would avoid doing that with multiple and stick with one if you can. And that'll help you grow exponentially even faster over time. And you won't be having to worry about all this because you're using the money. The benefit will exceed your repayment. And it's not so much about the rates anymore. It's not so much about even the term. I would recommend starting off with, if you can, a longer term because it'll bring down your repayment. But if not, for example, you get 20,000, even if you got 100,000, you had bad credit, you only got 6 months, 7 months, etc. Well, I paid off early if you thought you could or you needed that time. Okay, next time around we get you maybe 8, 9, 10 months plus, more or less. We get you access to more funds. We drop the rates. Next time around, you do it again. You decide, okay, renew it. Boom. Refinance again. Over 50% of the balance has been paid. Your time is up. You can come up and get more funds. add-on funds. But everybody starts somewhere. Don't look at the daily or weekly as a negative. Look back in the mirror and ask yourself, do I really know what I'm doing? Do I really understand my business finances? Because that's what it comes to at the end of the day, is your business finances. Whether you are the person handling it yourself or not, you should be outsourcing it to somebody who can help you with that so you can focus on other parts. So whether it's a daily, weekly, bi-weekly, monthly repayment, you have to begin somewhere and start with what you can get your hands on. If it's going to be that the benefit exceeds the repayment, if it's up here, it can still work if it's level. Down here, it might hurt you cash flow wise. Maybe you're doing this, you're even, and then boom, the repayment just 3 months down the road, you took more, and then boom. So you have to understand like what you can get your hands on. What kind of funding details do you need to have so you can be attracted to the lender? And I can go on for another 15 minutes if I wanted, but I'm going to conclude here by saying this. You can't always get what you want. You know that song, right? You have to start somewhere. And then in the meantime, build your business credit while you have a cash advance. Work on building your personal credit up. This is what you can have in 4 to 6 months, 4 to 8 months with business credit. And then you worked on your personal credit, you're repairing it, you're doing whatever you need to do there. You came up from a 650 to a 660, 630, 580 to a 660. You have more revenue, you have more time in business, you have business credit established, those foreclosures, all that is cleared. Now guess what? We can look at getting you a monthly repayment with a term loan lender. You have collateral, we could get you there faster. SBA Express loans look more attractive now. Standards SBA 7A loans up to 350, or Express up to 350, SBA 7A up to 5 million, etc. 504 loans, etc. But there's this whole misconception on, well, I don't want a daily or weekly because you don't understand your finances. That's one part. You may do, but you're like, how do I get away from them? Well, I'm showing you, or I'm telling you more or less, but there's other content on my course that'll go through all this. So begin somewhere, pick your quote unquote poison, whether you think about it like that or not, and see how this can benefit you. And don't look at the, well, I'm paying $200, $350 a day, I'm paying $100 a day. Well, that's part of it. You want to know, but if your business is already sound and structured enough where the sales are making up for that, you won't have an issue. But when you're just trying to scrape by and trying to look for money for COVID relief, lines of credit may work, but you won't even qualify, then business credit, credit line hybrid, all these other things with building business credit and getting access to business credit cards will be your route. Crowdfunding, HELOC loans, line of credits, or different line of credit installment loans on the back end, 401k, IRA financing, etc. So again, I can go on for a long time, but I will leave it at that. You have to move up level sometimes. You got to start somewhere. You got to say, well, I got to take what I can get. I'll come back and get more. In the meantime, I'll also work on the back end to get these access to these funds. Boom, where I get an excess of 20 to 30,000, and then I'm growing. So that is everything for me. Look down below this video. There might be extra resources. There might be another lesson to go to, but I will leave you with that. Take care. Bye.